Hello traders, this is Rich from Tradesight. This is the market preview for the coming session. This is going to be for Thursday, November 21st, 2013. We had a down day across the session where the major averages got hit and hurt mostly after the FOMC minutes were released at 2 o'clock in the afternoon. So definitely saw downside across the board and also negative market internals. In fact, we were minus 1,000 issues on New York, which is definitely going to do some damage to the cumulative advanced decline line. First, let's take a look at the structure of the Nasdaq, because that was really the one that's getting a little bit close to the trend. Here's a look at the NQ futures, and you can see that we are getting precariously close to the upper boundary of this pattern that we're working in right now. So if we get back down to that area, that's going to be a very, very notable development and a very important level of support. Also note here that down on the bottom in the volume histogram, you can see that we're on the third day down now, and on the third day down, we were starting to actually increase the volume here to the downside. Really just not a good technical setup. Could have a little bit of a relief tomorrow. Oftentimes the third day down is where some of those initial shorts cover, so we'll just have to see how that plays out. But let's move on and take a look at the individual levels. Let's kick off the levels review with the NQ futures, since we were just looking at them. We're still basically still in this frustrating trading range. We tried higher prices, broke back down to the downside, so we're coming into this 7/8 area, which is going to be minor support. If we do continue lower, there's going to be much stronger support at this swing low, which is also this gap fill if you follow the cursor back across here. So this 33.14, 33.15 area is going to be very, very important support. If that breaks, then we're going to look at the gap fill and also the 50 period moving average. To the upside, resistance remains at the high water mark of this move at about 34.24, and then above that is going to be the 8/8 level coming into play. Moving on to the ES futures, third day down as well. We are making good on this outside day down, so that should be no surprise. We did come in today to interact with the 10 EMA for the first time in about a week, so we're going to find a little bit of support there at first. Doesn't mean we couldn't continue lower. If we do break lower, this impulsive bar is going to be important, about 1756, and then below that 1750 is going to be the 4/8 level on the Murray Math box, and very important. Resistance is going to remain at the high water mark, which is 1799.5, and then the 6/8 level above that. We'll take a look at gold futures, because they are starting to do something interesting technically. I think you can see what's happening here, where we're gaming the static trend line here off of this seeker count, but we kind of eventually lost the support there and broke to the downside. We settled just a little bit below that 0/8 level at 1250. But that may actually come into play tomorrow. We may not release to the downside right away. If we do follow through, release to the downside, the minus 1/8 level at 1218 is going to be important. That's also the previous swing low. Here's a look at the oil futures. The oil futures are still kind of hanging in there. We're 12 days down in the seeker count. The trending portion, those are the red numbers. So if we get to 13, we're going to have that exhaustion warning in place, and then probably pivot back to the upside. We are 7 days down now in this new little momentum phase. Those are the green numbers. So what we have to be on guard for is getting a recycle here by printing 9 of the momentum numbers, the green numbers, before we get to our 13. So either way, definitely want to keep an eye on this chart, especially because this could be very important. So here's a look at the cumulative advanced declines. We were definitely real negative on the New York side. We're minus 1,000 issues. So what we're doing is we're starting to roll back down here again. We don't have that big divergence just yet, but it's certainly something that the market could build on. The Nasdaq side of the market, that's the lower graph, is still working this positive channel. If we do roll down below this, that would probably be enough to kill the rally and kick off a bear market. But we're not there yet. We're only at the midpoint of that regression right now. All right, here's a look at our multi-sector daily chart. Obviously, with gold prices being so weak, the XAU did not perform very well. Still just kind of getting wrung out here. The semiconductors, which is the blue line here, were very weak. The financials kind of rolled over towards the end of the day, and the BTK was really the only break point for the Nasdaq side of the market. All right, so here's a look at the individual sectors ranked from best to worst. The BTK was the top gun on the day. The broker dealers were pretty strong too. BKX is just kind of middling here, hanging around. Things we want to focus on here: the transportation average was kind of just trading with the market, but the OSX was actually a bit weaker than the broad market, so it's not real positive. It's not crushing it. They weren't really at the bottom of the list, but it's something that we don't really want to see. Utilities were weak with rates doing what they were doing, and the XAU gold and silver index was the last laggard. All right, just before we move on to the individual sectors, just want to take a look at the TLT. The TLT was very weak on the day, and it had a pretty aggressive move to the downside after the Fed minutes. We closed just a little bit below this zero waste level, just around 103. That had been very critical support earlier on the chart here in September. Mostly. So really want to see this area hold. If this does break to the downside, note here in the momentum phase, I'm sorry, the trending phase of the Seeker, we're only 3 days down now, so we could potentially run down for another couple of weeks if we lose this key support. So if we start to lose this 102 area, we could see a very aggressive move. All right, so let's take a look at the individual sectors. Here's the BTK. BTK is now 8 days up, trying to get back up into this 2250 area. It's going to be big resistance, especially if we're going to be 9 days up here in the momentum phase of the Seeker, which is very possible. So if we do print that, I would actually be looking for some potential reversals in that sector. Broker dealers were strong on the day. I want to take a look at that. We're 9 days up now in the Seeker momentum phase, right into that 8/8 area at 150. So we'll definitely not be looking at pile-on longs at this point in this sector. BKX was just kind of nowhere today. It's 9 days up, but we don't really have a lot of extension here in this phase. This is really just more of a timeout here. So just keep an eye on this 3-day range here. So when we break out of this and clear this range, we should get a pretty decent move. Transports 3 days down now. We're right in the area of this 10 EMA. This is really the first settlement below the 10 EMA. So if we undercut today's low by even a tick, we're going to go from this exhaustion warning to an actual exhaustion signal here in the Dow Jones transports. Oil services are up next. Came in to use the support area of the 4/8 level. This is a very strong area. We've got that 50 DMA just below it. So we're short-term negative for now. And if we do lose the 50 DMA, we're going to wind up being intermediate-term negative, which is very possible. And we do have this little bit of an expanding pattern developing, which sometimes is a little bit of a tell of a reversal coming. Next up, let's take a look at the semiconductors, the SOX index. This is starting to get a little funky here. We settled down below the 50 DMA. This is the first time we settled below the 50 DMA since back in early September. Definitely notable technical development. We haven't really broken to the downside too much yet, but we're definitely seeing some real rollover potential. The MACD is getting down towards that zero line. When we first get down there, probably a little bit of support, and if we break that zero line, we're probably going to wind up seeing some decent downside momentum develop. All right, folks, that's going to be it for tonight. Good trading to you tomorrow, and as always, thanks for listening. This has been Rich for Tradesight.